Hello everyone, my name is Jonathan Stinton. Thanks for joining me, and over the next 15 or 20 minutes or so, I want to talk you through why choose Coventry for intermediaries. Firstly, I'll give you some highlights of our proposition. We'll then talk through some of the recent buy-to-let changes and enhancements. And then I thought we would revisit an area that can really help you stand out from your competition, be that of other advisors or digital firms. This is Offset, a proposition that's gaining more traction and something that's potentially useful for a lot more of your clients. Finally, I'll finish off with how we're here to help support you and your business. A strong part of our proposition and commitment to the intermediary channel is based around our 4 broker pledges, giving you 48 hours notice before product withdrawal with the knowledge of what products are being withdrawn as well as what the new products will be. We feel helps position you correctly in front of a client to give the best advice. Publishing our up-to-date service standards daily, so you also know what to expect when doing business with us. We can show you how quickly we can answer your calls, as well as how long it takes to review documents and issuing mortgage offers as an average. Never cross-selling insurance to your clients. We understand your clients are yours, and any additional sales that occur should come from you, the advisor. And giving your clients the same products, rates and service by never dual pricing. These are all important components to our relationship with you. So our offering is very straightforward. Residential purchase and remortgage up to 90% loan to value. Buy-to-let through Godiva. Offset as a range of different alternative products and proposition, and also product transfers. We're going to cover all these areas during the presentation. On the residential side, for employed, we can cater for a wide variety of job types and do accept second jobs and additional incomes. For self-employed, we'll ask you for 2 years trading, sole trader or for limited companies. And we'll always look to use the latest year's figures for affordability purposes. If there is a significant jump in figures though, we may look the average, but speak to your BDM, explain the situation, and they can give you their view on whether we may use the latest year's figures or not. And for limited company directors that have more than 20% share, we use the applicant's share of the latest year's net profits after deduction of corporation tax plus salary. Very powerful when looking from an affordability point of view. We also have a unique product offering via our Flex fixed ranges. This range offers the security of fixed rates with the added benefit of having no tie-ins from day one. We typically have these products on residential and on buy-to-let, and if you need to source for them or want to source for them, select the No ERC filter on your chosen sourcing system. So again, think fixed rates with unlimited overpayments and no ERCs. These can be very useful for clients in an uncertain market. Moving on to buy-to-let. Some of the recent changes we've made include removing the minimum income requirement and the minimum time in employment. So we've got 0 minimum income on buy-to-let and 0 minimum time in employment on buy-to-let as well. And as of the 16th of May, we've also increased the number of buy-to-lets you can have with us from 3 to 5 per household, as well as increasing the aggregate borrowing from £1 million to £2 million. And don't forget, you can still look to place first-time landlords, non-owner occupiers, as long as they're not first-time buyers. And we still consider things like family discounted sales. Valuation is included, typically up to a property value of £1 million, And we also have a range of flex and flex fixed products on buy to let. The 5-year flex fixed is proving to be a very popular choice for landlords who are looking to secure a fixed rate but still retain that flexibility. Another change we've made was to the income thresholds. So if your client earns below £49,000 and is not a higher rate taxpayer, including the gross rental income they receive from all buy to lets, the calculation is 125%. If the applicant earns over £49,000 or is a higher rate taxpayer, then the calculation is 145%. In Scotland, because of the tax bandings, this remains at 42,500. The reference rate is then determined by the length of product term selected, and for any product less than 5 years, the rate is 5.5%. If it's a 5-year deal selected, then the rate becomes 4.5%. Again, either of these at 125 or 145%, depending on the client's income situation. We're also really active in the portfolio buy-to-let space, and we do have a specific portfolio range of products to choose from. Our standard buy-to-let policy applies, but there are some additional requirements that need to be fulfilled on this, and they are detailed on the screen. All of this information can be found on our intermediary website, and we have also some useful material available for quick reference. Please get in touch with your BDM if you need any further details or if you do have a case to discuss. Hopefully the criteria on display is quite straightforward and accessible for your portfolio clients. Once you've checked the policy and are ready to progress to an application, our process is very straightforward. You firstly need to complete a buy-to-let portfolio document. Again, this is available online, and this needs to be fully completed with every application. This will ask for details of their existing buy-to-let properties, and also don't forget to include any unencumbered properties that the client might have. Completing this fully ensures our underwriters have all the information they require at outset, although there may be rare occasions when we require more information. And without this detail, our team can't make a decision on your case. Now I'll move on to a different part of our proposition, and we'll look at offset. As you would expect, offset with Coventry is very simple, very straightforward. If a client has any money in their offset savings account, they can either reduce their term or they can choose to reduce their monthly payment. They can switch between these two options throughout the mortgage term also to suit their circumstances. There's one savings account, and that gives easy access to their savings as and when they need it. There's no requirement for regular savings either, and they can also have direct debits and standing orders set up from that savings account. There's also online functionality and a range of different products available from fixed through to flex. And finally, subject to lending criteria and their original loan to value bracket, the client can also have further borrowing at the same rate. To visualise this, in this example, client has £100,000 mortgage, and as part of the application, we then set up the savings account that runs alongside the mortgage. So if your client were to have £100,000 mortgage and they were to have £20,000 in savings, this would offset the interest charged on that £100,000 mortgage. The client would still need to pay capital on the £100,000 loan, as it is a capital and interest mortgage, but they would only be charged the interest on the difference between their mortgage and their savings balance. And in this example, they would be charged interest on the £80,000. We also have a very easy to use online calculator, which gives you the chance to illustrate the potential savings to your clients. So in this particular example, we have a £130,000 loan over 20 years. It's a 75% LTV deal. The clients have £2,500 in savings, and they're also regularly saving £100 per month. The calculator also allows you to compare an offset mortgage versus a non-offset mortgage, and the system will then work out any potential savings. So for this particular example, the client could save 2 years and 4 months off their mortgage term if they continued with the same savings level and the same regular monthly savings. Something that clients, I'm sure, if asked, would be interested in achieving or even learning some more information on. So what type of customers could you talk to about offset? Well, effectively anyone with a lump sum or regular savings could benefit. As we've seen with the previous example, small amounts could make a difference over the term of the mortgage. Self-employed is another big opportunity, as this client type typically runs a surplus in their accounts to cover rainy day money or even to save for tax bills. Higher rate taxpayers who have got surplus income and like to accrue savings, but also clients who've got surplus income, maybe from investments, maybe from buy-to-let properties. All of the above could potentially benefit. We do have a lot of online material available to help support you when you're discussing offset with clients. To the left, we've got broker fact sheets. In the middle, we've got a consumer guide. And we've also got case studies that highlights the different benefits to different client types. These are just a selection of some of the things that we've got available. Offset is an excellent way for you to offer annual reviews with clients to track the progress of their mortgage term. This could help further reinforce your client relationship against disruption from things like digital, direct competition, even execution only. This is a very advice-rich proposition. Again, if you're interested in exploring this in any more detail, check our website or get in contact with your BDM. They'll be more than happy to help. Finally, product transfers. These are available on residential and on buy-to-let. At maturity, we direct clients back to their original advisor. And we also email advisors to let you know if there are any products coming to the end of their term. There's no dual pricing on product transfers. And we also pay a gross procuration fee of 0.30%. The process is very simple and straightforward. You gain permission from your client to speak to us about their mortgage. Then all you need to do is give us a call to get the relevant information about their mortgage account. We then issue you with the documentation you need to get signed by the client. You return it to us in sufficient time to get the deal set up for the client. So if you want the deal to complete on the 1st of a month, you need to have the paperwork submitted to us by the 23rd of the previous month. We can then get that product transfer set up and ready to go for you. You can also gather the information and begin the process up to 4 months in advance of the product ending, although you do need to wait until the product deal ends before the client can switch on to another product. if there are ERCs payable. We also understand the value that a BDM can bring to you as a firm. So that's why we now have 2 BDMs for every registered broker, one on the telephone and one in the field. They can bring you up to speed on the changes happening in our business, discuss cases, and help you get the most out of Coventry for intermediaries and help you get mortgage offers through more quickly. If you don't know who your BDM is, you can go onto our website, just type in your full postcode and the contact details for your BDMs will be available. I've demonstrated 2 of our BDMs on screen. Again, this will vary depending on where you're based within the UK. So hopefully that gives you more reasons why you should use Coventry for intermediaries. The benefit and accessibility of having 2 BDMs, a really strong transparent service proposition, innovative products, and continued support with product transfers. Our website also has a wealth of information and functionality, and it's there to help make your client's application journey smooth. All the calculators, criteria, submitting cases, tracking, printing offers, as well as uploading documents, it's all available to you. It's all accessible. In terms of giving our contact centre a call, our opening hours are 9 AM to 6 PM on the free phone number shown. Our average call wait is typically less than 30 seconds. Thank you for listening. Thank you for the business, and we look forward to working with you in the future.